Next guest says that, well, if this happens, there's some interesting and consequential things that could happen. Joining me now, Main Street Asset Management, LLC Chief Investment Officer, Aaron Gibbs. All right, Aaron, first let's talk about this because, you know, as this goes up and actually uninverts, that's supposed to be the quick countdown to a recession. Do you think history will repeat itself?
You know, we've been so wrong for for so many months.
Throw it out.
I think the one thing that we could really hold up where we could say that even if we do have a recession, it's going to be extraordinarily mild, is really about the employment situation in the U.S. So we may technically have slower GDP growth, but we're not going to have that accompanied by what our greatest fear is unemployment.
Right.
And that's a lot has to do with demographics and
would
aging.
That be a soft landing then?
So that would really be a soft landing. Is maybe technically we hit a recession, but we still have low unemployment, we still have consumer spending,
right.
And so maybe it slows down for 2 quarters. But I think really looking at these type of demographics and the strength of the U.S. consumer, which again we've been very wrong for the past 2 years. We've been able to keep spending even as rates go higher. I think that's a really important factor when looking at how bad a recession could be.
Of course, let's remember too that the leading economic indicators, the Conference Board, they keep saying yes, it's flashing recession, but even they believe it's going to be a shallow recession. So maybe we waste a lot of time if we're too focused on this little shallow recession instead of what comes after that or potentially comes after that.
Right, and focused on the technical definition of recession versus how consumers actually feel and how they're able to spend and pay for their bills and so on.
So you like consumer staples, right? I pulled up the XLP, the consumer staples line, because, I mean, obviously this has been somewhat of a disappointment the last couple of years, and it's at a key support point, right? It was resistance and it's been support. Do you think if it holds here, it can have room to bounce here? I
think definitely we have room to bounce. And again, it's more of a defensive play. Clearly, with rates rising as they have, we're just in some big headwinds when it comes to stocks. So I feel these are sort of your recession-proof, defensive types of trades that have been doing very well. And again, U.S. consumer still not going away, still buying its Coca-Cola.
Coca-Cola, 3M, 3M having a good day today. General Motors having a pretty good day today. Coca-Cola, and of course there was a big some of these consumer staples got hit on this Ozempic and some of these fat loss drugs. And, I think that just creates a buying opportunity. I mean, I don't see how people will stop drinking Coke. Maybe they'll drink more. I mean, listen, you can take a pill, have 2 slices of pie. Why 1? I know it's supposed to curb the appetite, but those kind of things have always seemed artificial to me. This was the buy. Consumer staples was the place to be in the beginning of this year. They had pricing power. They were weathering the storm, and then the bottom fell out.
Right. And so I think we've seen some good reports. Coke obviously already had its pop today, for no pun intended. But I think that just looking up at sort of your consumer stocks, I'd actually say less on your big purchases, anything that has to do with like your financing, but smaller purchases where it doesn't require financing, I think they are looking very attractive. They've been beaten up, and they're less likely to go down if we do have this another wave and this another hit.
I got you. All right, Aaron, hold right there. Thank you very much.